In the last episode, we diagnosed a specific pathology, the intelligence trap. We saw how smart people, like Ethan, the software architect, spend months solving the wrong problem. They treat financial decisions as information problems. I need more data. Instead of filtering problems, I need less noise. We introduced question 1, the entry point to the simplicity filter. What is the singular job this money needs to do? If you answer that question, you extract the principal. For Ethan, the job of life insurance wasn't investment optimization, it was income replacement. That one insight turned 47 pages of notes into a 20-minute decision. But knowing the principle is only the first step. You still have to deal with the 14 bank accounts, the conflicting advice from your brother-in-law, and the tax schemes your accountant is pitching you. Today we're giving you the rest of the framework. 2 more questions, 5 minutes. Total clarity. The simplicity filter operates in 3 phases. We've done phase 1, extract the principle. Now we move to phase 2. This is where the rubber meets the road. Question 2, does this option serve the principle, and is the complexity premium worth it? This is your binary filter. You look at an option, a product, a strategy, a piece of advice. Does it serve the job you defined in question 1? If no, discard it immediately. We don't care how good the returns look. If yes, you must ask the second half of the question, what is the complexity premium? Every layer of complexity has a cost in time, stress, and cognitive load. We often calculate the ROI return on investment, but ignore the ROE return on energy. Question 2 forces you to count the cost. Then we move to phase 3. This is for the mess you've already accumulated. Question 3. Does this account or information source serve a distinct, necessary function that cannot be served elsewhere? If the answer is no, it must be pruned. This is the Subtraction Protocol. You cannot have clarity if you are maintaining 14 different accounts, just in case. 3 questions. 1, what is the job? 2, is the complexity worth it? 3, is this redundant? Let's see what happens when we apply this to real people. Let's look at Chloe. Chloe is 28. She has $100,000 in cash and is paralyzed by 5 different investing podcasts. One says real estate, another says crypto, another says stocks. She applies question 1, the job. She looks at her history. She realizes she succeeds when things are automated and fails when she has to make active decisions. Her principle, my wealth builds when I automate it and ignore it. Now she applies question 2, the filter. Real estate requires active management, fails the principle, discard. Crypto, volatile, requires watching, fails the principle, discard. Target date index fund, automated, boring, fits the principle, keep. She unsubscribed from the podcasts. The noise stopped. Now let's look at Raj. Raj is a cardiologist. He loves optimizing. He's looking at a complex oil and gas partnership to save taxes. He applies question 2, the complexity premium. The deal saves him $6,000 in taxes, but it requires 40 hours of research, annual K-1 tax forms, and locks up his money for 7 years. Raj calculates his time is worth $400 an hour. He is spending $16,000 of his time to save $6,000 of taxes. The complexity premium destroys the value. He discards it and buys a simple municipal fund instead. Finally, Maria. Maria has 14 financial accounts. She doesn't know her net worth. She applies question 3, the prune. She asks, does this old 401k do anything my current IRA can't do? No. Consolidate. Does this Robinhood account with $127 do anything my main brokerage can't do? No. Close. She went from 14 accounts to 6. She didn't gain more money, she gained visibility. This framework doesn't just work for your portfolio. It works for your relationships. We see this all the time. One partner is the engineer, wants all the details. The other is the executive, wants the bottom line. When the engineer tries to explain the spreadsheet, the executive shuts down. The simplicity filter fixes this. Stop discussing tactics, the spreadsheet. Start discussing principles, the job. Don't say, we need to rebalance the small cap value fund. Say, our principle is grow wealth without watching it. The portfolio drifted. I'm fixing it. For professionals, how do you know if an advisor is good? Use the simplicity test. Tell them your principle. Then ask, given my principle, what do you recommend and why in 1 sentence? If they give you a 40-minute lecture on market dynamics, they are failing the test. Complexity in explanation usually signals that they don't understand it, or they are trying to sell you something you don't need. When you install the simplicity filter, You change your identity. You stop being a collector of information. You become a diagnostician. You realize that boredom is not a failure state. In finance, boredom is success. It means the emotional charge is gone. It means your money has become a utility, like electricity or plumbing. It works in the background so you can focus on your life. That is the ultimate return on clarity. You now have the high-level framework. 1, extract the principle. 2, filter the complexity. 3, prune the noise. But the devil is in the details. How exactly do you extract a principle if you have no financial memory? How do you consolidate a 401k without triggering a tax event? How do you handle the emotional resistance of closing an account your dad opened for you? This is why we wrote the book. The Simplicity Filter contains the full 12-week protocol. It guides you week by week. Week 1, the history scan. Week 6, the keep kill analysis. Week 9, the information unsubscribe. If you want to do this yourself, grab the book on Amazon. If you want a guide to walk you through it, visit SafeSimpleSound.com. That's the end of treating the wrong problem. That's the beginning of solving the right one. Thank you for listening.